Hey everybody, you know me, Kaylee McMahon with the Apartment Queen. I have a special guest on here today, and I'm very excited to listen from another woman's perspective about syndicating apartment deals. Obviously, that's part of what I've done as far as an investor. But when you're looking at someone else's perspective, what we get to learn today is a little bit about the pros and cons of being a passive investor in a real estate deal or a syndication. And then also kind of what do you get? Like, why would you do it? So Lisa, would you please introduce yourself because I won't do it justice to our audience.
Yes, no problem. So my name is Lisa Hylton. I am from the Caribbean. I'm originally from the Caribbean, so originally from the Cayman Islands, but I live in Los Angeles. And my background has been approximately, 15 years in public accounting and investment accounting, so controller accounting for private equity real estate funds. And in the past year or so, I've been working on building a syndication business, specifically focused on multifamily and apartments. So providing opportunities for people like myself that work in corporate America, have these extremely demanding jobs, but also want to invest in real estate and really have no desire to be a landlord, but would like to be able to diversify outside of the stock market. So at a high level, that's what I do. And that's the background of myself. So yeah.
That's awesome. Thank you so much, Lisa, for introducing yourself. I think so much of that is going to apply to individuals listening and watching this later on. And so from your perspective, I guess let's just dive right into it. What would
Yeah.
you say are some of the cons of investing as a passive investor? And there's many different types of syndications, but specifically into syndication, let's just say that.
Yeah, totally. So some of the cons of, choosing to take the syndication passive investor route is one, you have no control. So you can't control when the property is sold. And you can't control what goes on in regards to, like, say, the business plan. So those are like the key things. Like, you really don't have any control to the extent that, like, yeah, you don't have any control. So I would say that's the big one. The second one is that, you are leveraging. So this one is both a pro and a con. But the con side is you are leveraging the time and expertise of someone else. And with that, the con in that is that you want to make sure that you pick the right people to invest with. Because if you do invest with the wrong people, and this is the con, like, it can be a very not a nice experience. Luckily, I've not had that experience to date. I'm so grateful. I've invested in 4 syndications to date and will invest in more this year in 2021. And so far, I have been very blessed with, choosing the people I've chosen, and we can get into that later. Um, um, Another con, I would say, so we talked about control. We talked about, finding the right people. Like, if you invest with the wrong person, like, that's a big con. And then I think another con regarding passive investing is that, some people believe that they don't need to do any work. So they feel that, oh, they just sort of, like, someone presents them with a deal and whatever, and, like, they sort of invest blindly, and they don't do enough research on either the asset class that they're trying to invest in, as well as the market. So those two things, like, really making sure that you, even though you're investing passively, that you are spending time getting educated and understand the asset class that you're investing in, because that is just so important. That helps you to make, you're working super hard for this money. So you want to make sure that you are, being a good steward of it and putting it into the right, like, markets and the right asset classes, the right operators, etc. So I would say those are the big cons that come to mind for me.
Yeah. And, like when I look at a deal that might seem risky, like a D class deal, and don't do it, but, or like a C class deal that's on the low end or whatnot, the cool thing is, for the most part, not everything, all those cons that you mentioned, typically if you're doing your due diligence correctly, and if you are sophisticated and you've taught yourself enough information about, like you said, the people, the
Right.
asset class, et cetera, that reduces or eliminates that risk. So it can actually turn into a pro, and then you just understand better. So what would you say, going back to pros and cons,
Mhm.
what would you say are some of the pros to investing in a syndication as a passive investor?
Yeah, totally. And I would like to say, first I want to touch back on my background. So, like for me, as a controller on funds that invest in real estate, my job is extremely demanding. So, we're talking about long hours. And I remembered, so starting with the first pro, I remembered when I made my first investment, which was in the summer of 2019. And that project started to pay distributions. And I remembered it was like Christmas time, and I was busy at work trying to do distributions for the funds that I'm working on. And I remembered like shutting down towards the end of the night, and then logging into my bank account just to make, checking everything. And there I saw, the cash come in from those deals that I've invested in. And I said, wow, like, yeah, this works. And for me, I think the biggest pro is that you just don't have a lot of time. So like, I would not have the time to like focus on, remodeling some asset like that's in Atlanta or in North Carolina, which is where some of these properties that I invest in are.
Yep.
Like, I would not be able to be doing that and also like doing the numbers on the work that I need to be doing right in front of me, and like making sure that I'm sending out these wires correctly and then I'm running the promotes and all that stuff. Like, I just don't like, mentally, I don't have capacity to do all of that. So to me, I think the biggest pro of investing in, you know, syndications, be it real estate syndications in, all the different asset classes, is that one, you can leverage the time and experience of people who are dedicated full time to do this work. And when you've found really good operators who you like how they report and provide stuff for you, it's just awesome. One, you're able to free up your time because now your money's out there working for you, and you're not like working for it and like trading time for that money because that money's out there doing its thing. I think one huge one huge pro is that once you start learning, you as a passive investor becomes really like, you understand the asset classes like apartments, mobile home parks, industrial, and then you start getting really good at your markets and you understand what markets you want to invest in. Once you do that, as well as build relationships with operators, you can start to diversify your portfolio in terms of real estate into all these different asset classes, which is just amazing. And I love the fact that when, because I've gone through at least 1 year of tax reporting. So all of the operating distributions, thankfully through cost segregation studies that are performed on the properties, like I'm not paying any taxes on them. They don't increase my already high gross income. So yeah, like there's just so much. I'm totally grateful, and I think that's one of the main reasons why I've seen it as a way for other fellow people in the financial services industry who work for these huge investment managers, and who aren't, not everyone is able to get points, promote points, and be in the funds. Like, not everyone is in that situation, but a lot of them have the ability to invest and would like to invest in these kinds of deals. So, I'm really passionate about being able to provide these kinds of opportunities for other people to be able to invest as well.
That's awesome. And I mean, there's so much stuff that came to mind because, someone's like, where do I get started a lot of the time? And a lot of the time I just end up saying passive investing, just because, for example, like this one behind us in my picture, that's
Right.
deals in Phoenix. We had a huge fire on that property. We've had people die on properties. We've had
Wow.
floods. I mean, it's just what happens. People live in these buildings. So that's why you have insurance, but there's
Right.
a long process when it comes to, negotiating with the insurance companies, when it comes to repairing things,
Mhm.
getting the people safe, replacing income. I mean, that's just one example. There's so many different things, but when you're passively investing, these things happen. And instead of having
Yeah.
this idealistic view of everything's going to be perfect all the time, you see these things and you realize, well, I guess that's why that I'm getting better returns than like a
Mhm.
mutual fund, for example, because these deals involve, more risk. But
Yeah.
however, the returns are better. And then, like I mentioned, we have some fail safe things put in place, like insurance,
Yeah.
making sure we have reserves, making sure that I'm trying to think of all the different things, stress testing our underwriting, and
Mhm.
multiple other things. But and then when you're passively investing, you can see from the lens of, okay, it doesn't have to necessarily stress you out like it stresses us out, because we're the ones having to
Yeah.
fix it and deal with it and negotiate and whatever.
Sure.
It's not pleasant, but we do that and fight on the behalf of our investors. And seeing that, that's one, kind of normal, and then two, it's not something to stress about. So eventually, if someone ends up wanting to become active,
Right.
it's just part of the gig, and maybe even because there's so much work in being a full-time syndicator or a full-time deal sponsor, maybe that will never be someone's interest, and saying, oh, I don't really want to do that full-time,
Mhm.
but I can still make money off of somebody else doing it full-time.
Right. Exactly. Exactly.
Now, you mentioned earlier some things about tax advantages,
Yes.
and specifically when you're doing a real estate syndication, that's something that, regardless of, I think, if it's commercial, regardless of the necessarily like type of asset class. You mentioned cost segregation. I think a lot of our listeners may not know what that means,
Mhm.
or kind of what you get when, say, for example, I've been in deals where I've flipped them in 18, 24 months, and it didn't make sense to do a cost segregation
Mm.
because we're so in it for so short. And then when you're in a longer hold deal, maybe some people that are more patient and have the time to be able to take more advantages of that. What advantage do you get from doing a cost segregation? What other tax advantages as a passive investor do you receive?
Yeah. So for me, I think the primary, tax advantage of when the operator does do a cost segregation study, usually the deals that I'm going into are usually 3 to 5, sometimes even a 7 year hold period. So it's a little bit longer. And then what ends up happening is they're able to go in and accelerate the depreciation expense on certain aspects of the property, because most property, it's like 29, 27 and a half years. Whereas with a cost segregation study, you can then sort of bifurcate out different parts of the building and assets to then, accelerate it like 3 years or 5 years or 6 years. So then being able to be in a situation where the operating distributions that come off of that property are offset by these paper expenses. So you don't end up paying any taxes on all the operating income that you've received. And what that looks like is, like, for me, like a typical investment, like 8% pref, for instance, and you've invested like 100K, that's approximately like 8,000 coming to you for that year. And then the cost segregation study could have a loss, could end up where you have an actual loss. So as a result, none of that $8,000 you pay any taxes on until you get later on when the property is sold.
That is such a good point. And that's something that, my first deal, I mean, I know all these things, and you have investors that may not have been as sophisticated as I wish they were in my first
Right.
deal, but that was something that kind of came back to me where they're like, well, I didn't understand, that I was going to have a paper loss. I'm like, that's a good thing. Like,
Yes.
go Google what that means. Our CPA, used basically, I forgot what it's called, but on that building, it was a shorter term hold. So we didn't do a
Mhm.
cost segregation, but she did essentially she has some kind of certification where she's able to do sort of a cost segregation, but it's more in depth than a normal depreciation uh, expense write-off, or normally just depreciation, but it's not as in depth as like the physical
Got it.
the engineers will do. So anyway, point is they're like, what is this? I'm like, it's a good thing, So
Yeah.
that's part of the process too, I think, is learning that these things that we do, they're not only cool, but they're really powerful because it can affect other active income that you have too. So that's awesome.
Yeah, and I think that's the beauty of real estate as well. Like, it's just The tax code is, created like that in a way where it incentivizes people to build businesses and invest, invest in real estate, like buy real estate to provide housing for other people, and then you also be providing jobs. These are also some of the pros of investing in real estate. Is you can change, you can use your money to change a community, a city, a city, provide jobs to other people while also making money. And that's amazing. I love it. So
No,
yeah,
I totally agree with you. So we've covered some of the pros or some of the cons, some of the pros of passive
right.
investing. Now, what would you say? You kind of covered this a little bit earlier. What would be some tips that you could give our listeners and audience and viewers
Mhm.
about choosing the right team? Are there any lessons that you've learned as far as how to or how not to or
Right.
anything like that?
Yeah. So in terms of lessons, I would say luckily so far, I've not had any bad experiences. So thankfully, in terms of like choosing a team, I think that, networking, getting out there, listening to podcasts like these, and sort of listening to operators and sponsors and getting to know people, going to their websites, checking them out, listening to them on podcasts, reading their blogs and articles, getting on a call, getting to know them, and starting the process of getting to know them. I think all of that is really good, as well as, getting into groups where there's other passive investors and asking people, hey, have you invested with this person before? What has been your experience? Asking the operators about their track record, sort of seeing what their properties look like. I even say, you know what? Why not even visit some of their properties, like to the extent that you are living close by or whatever that works for you. If you're going to invest 50, 100, 150, 200, then spending a weekend to go fly to wherever for like 200, 300, $400 is not
It's pretty
very much.
pretty cheap insurance.
Yeah, it's not that much for in exchange for like the 100K that you're getting ready to invest.
Yep.
Like, I would say just, take your time to get to know the sponsor. And I like to, when someone brings a deal to me, I like to ask who is going to be the operator, like who's physically going to be asset managing, like this deal day in, day out, because I want to get to know them. I want to understand what their track record is. I don't have a problem with someone bringing me a deal who's not the operator. I just want to know who ultimately is going to be the operator and just understand what their track record is and like what they are going to be doing. Because at the end of the day, like they're the folks who, you can I have a podcast myself, and I recently had someone on and they were like, you make money when you buy the asset, but you keep your money when you manage the asset properly. And that right there is like super important.
100% yeah, that's definitely some gold nuggets right there of some advice.
Yeah.
Are there any, so I guess, well, I've got one more last question. Are there any interesting questions or questions that so for example, I'll just give one example that I've experienced and then see if you could give our audience any good ideas.
Sure.
I get a variety of different questions from different people because depending on our type of deal, it's anywhere between a sophisticated person to an
Mhm.
accredited person. And those definitions kind of define their knowledge base in between. And one question I got recently on a bigger raise I was doing was, can I see, and I thought this was kind of smart. And he goes,
Mhm.
no syndicator has answered this for me, but will you let me see your monthly financial statements from prior or current deals that you have? And I go, yeah, I guess, because I have a
Mhm.
Dropbox that I basically upload. And now we have an InvestNext portal that we do it now. But
Right.
it was where I had links that I had all of the previous quarterly lunches that I did for investors. And that would show them, for the whole portfolio, what the numbers were looking like each quarter. And
Right.
go, yeah, I mean, yeah, if you want to dig through all that stuff, for sure. So That was the first time I've ever been asked that before, but they had said that no other syndicator, would let them see that. And I'm like, well,
Wow.
it's just a Dropbox link and I fix it to where you can't edit it, you can
Right.
view it, but that was something creative. Do you have any cool ideas of questions to ask a potential team?
Yeah, it's funny that you said that because one of the things that someone recently brought a deal to me, and I remembered saying to myself, coming from my work,
Yeah.
my line of work, I remember saying to myself, it would be really, 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 really beneficial if when they're presenting these deals, that they would also show like their current deals, the role that they're playing on these deals, like who's managing the day to day, and underwriting versus actual, like how is it actually doing right now?
Yeah.
you know um all of the deals that they're working on, and to talk about like what they've done on those deals and like how those deals are going, because when someone just presents you the current project that they are trying to raise money for and buy and whatever,
Like them.
like that's great, but like you might as well just provide as well, like here's my portfolio of my other deals, like this is how they're doing, this is what investors like on those deals are experiencing in terms of returns.
Mhm.
These are the struggles that we've had, because let's face it, COVID has been challenging for everyone. So these are the struggles that we're having, but this is how we are dealing with it. This is how we're overcoming it. And then, yeah, like to me, I think that is just, I think that's amazing. Like maybe, if you're dealing with a investor who doesn't come from that background, they probably don't know to ask that
That's why I'm kind of
because,
it now, because I'm like, if you don't know, you can ask. You can kind of ask for anything, but I wouldn't be asking for their social security number. I wouldn't be asking to like log into their bank. I wouldn't, those
right.
crazy weird things. Or like I've had a weird question that was like, what are the age of the leases? Like they wanted to know on this 200 unit apartment, like how long has each tenant been there? I'm like, oh my God, just look at the rent roll. I think that's what you meant to ask. But you don't
Yeah.
know. So I'm glad you're saying that.
Yeah, I think really and truly it's like about how those other deals are doing. And as a passive investor, like networking, meeting other investors, because you want to like have that community of other people that you can talk to and sort of say, hey, like, have you invested with this person before? What has been your experience? I think those kinds of conversations are super important.
Yeah, and sometimes I find that investors find like a level of safety, whether it's that current deal or whether it's other deals with the same person or whatever. But being able to kind of talk to each other and
Yeah.
cross reference, because it should be a pretty unbiased answer, if you will. So
Yes,
one
agreed.
I find a lot. Well, Lisa, thank you so much for being on here. I really
Yeah.
appreciate you teaching our audience a little bit about the pros and cons of passive investing in syndications and real estate.
Yeah.
If anyone in the audience is interested in getting a hold of you for your future syndication business or just your expertise as a controller, which I think is awesome, especially since it's not just a controller, it's a controller of funds, which is essentially, anyway, it just super in-depth knowledge. How can our audience get a hold of you?
Yeah, totally. They can go to lisahylton.com. So that's a www.lisahylton, like the hotel, only thing with a Y. So lisahylton.com. And yeah, on my website, I have a 7-day passive investing made easy series,
Cool.
because once again, I totally understand that it can be a daunting process to make your first investment. I've been there. I know what it's like. And I know how hard it is to work for all of that 50K and all of those hundreds of thousands of dollars. So you want to, get to understand the process, but you also want it to be easy as well. So definitely check it out. Thank
Perfect.
you so much, Kaylee, for having me.
Totally appreciate you spending your time with us, educating our audience today. And especially, I like to have women on here to listen from a woman's perspective. So again, thank you so much for being on here today, and hopefully we'll have you on again.
Yes, thank you.